JB here. Hope everyone's doing outstanding. Wednesday, October 1st, 328. Apologies for that. 1 second. Just got to erase this. I'll talk really quick about the market. Some names I'm looking at go from there. 1 second. S&P all-time looks like we're going to close at all-time highs here. The SPY's at 669 as I speak. Remarkable stuff, all in the face of this, government shutdown that's going to just wreck the economy, cause inflation. Whatever you want to describe it. It's going to cause financial Armageddon. Get the bomb shelter ready. Just sense my sarcasm a little. Just another one of those headwinds. The market continues to climb that wall of worry. And I was saying it this morning. It's like uh, there's not much to write about this week in regards to the market. So this government shutdown just creates this great clickbait, right? I mean, it's just what it seems. Seems like every time we have this, whether the debt ceiling, all this fun stuff, it seems like maybe there's other things going on, geopolitical stuff. But this week, not much. So. Uh, yeah, just remarkable. But anyway, markets at highs here. This morning we had the ADP jobs report negative versus an estimate. I think it was 32,000 jobs created. Estimates came in negative 53,000 jobs. So Friday's jobs report is going to certainly. I wouldn't say it's more important, but it almost to me like sets the stage for even if it's a negative number, won't surprise markets. So um, I talked about 660 to 667 on the SPY as the range. We broke above that here today, and we'll see what tomorrow brings. Upper Bollinger Band 671. So maybe we find some resistance. We bounce up on that Thursday or Friday. But it's like there's so many things this year alone. I mean, you can count on how many hands you need to count all these potential obstacles the market had to climb over. I mean, DeepSeek, right? DeepSeek was going to destroy AI. I mean, the list goes on and on. The government shutdown. It's like who remembers the Suez Canal, right? It's like every event that happens is going to cause some turmoil in the economy, and then you fast forward 2 months and it's another thing that's going to put curtail GDP numbers or whatever, and then the market just keeps rallying. Suez Canal gets blocked. I mean, it was something that never happened before, or at least to that scale. And everybody thought, all these cargo ships were going to get delayed, car prices were going to soar, and just all these things that were going to happen. And there were some issues, but you didn't hear much about it. And then I think it was the fall of last year was the port strike, right? All these folks were going to go on strike. The people who unload the cargo ships, this was all on the heels of the inflation that was getting out of control. So people thought that on top of all the other things that was causing inflation, the port strike was going to cause prices to go up and shipping costs and all these things. And then you don't hear any more about that either, right? So just here's the government shutdown, and you see headlines now, of course, Captain Obvious saying if the government shutdown lasts for more than a week, there's going to be economic impacts. But it's like everything has economic impacts, right? Just the things that come out of left field that surprises the market and the economy. So we'll see. To me, I always say the thing that worries me the most when the market doesn't have some kind of wall of worry to climb. Hopefully that's not anytime soon. But so take a look this week so far. Every day looks like, I mean, pending any crazy pull to the end of the day, it'll 4 sessions in a row to the upside, all-time highs, and just gosh, the tariffs. I mean, going on. Oh, go on and on. Anyway, just quick on some individual names. So today, despite the market rallying, it felt like AI day, right? And AI day in a bad way. So this morning had reports out that, or I don't even know where the report came out, but that GPT was going to take away Reddit as their source for, I don't know exactly uh, what impact let's see if I can see. I'm trying to see if there's any. Well, I'm just trying to get details on it. But anyway, so a big source of traffic is because, well, supposedly is because AI utilizes Reddit as one of its source, a big source for a lot of the insights it gets, right? So that was, I would say, it's the 100% the bull case for Reddit. But there's reports this morning that if GPT was going to pull away the bots, I don't know if they were going to use other sources or what have you, and that was going to impact Reddit. And the stock just got destroyed this morning. And it's this AI thing. It's like every day, every week, every month, there's another company that's going to be supplanted by AI, right? And some of these names have been impacted, and then there's some of well, Google, right? Google's another one of those names I was talking about this morning. But then there's other names that kind of just hang in there, have been able to adapt and just I guess, avert disaster and being impacted. So today it seems like those names that have kind of been, I wouldn't say insulated, but have survived are just getting destroyed today. And, Wix.com is one of those examples. One of my top 5 stocks back in the day. I don't know if it was 30 or 60 bucks when I started talking about, but that's a name that people always thought AI was going to destroy. Because at some point, if you look at Wix.com, if you had to describe the company in a sentence, it's pretty much like website creation, right? Or to do it yourself, right? DIY. But now you have AI, and you could just pretty much type in a couple of prompts and get your own site, whatever it be, a storefront or whatever, up and going. But Wix, I mean, there's a lot of just different components to it that doesn't make it just as easy as typing a sentence or two. But people don't know that, right? So when you have concerns that maybe AI is gonna, hurt their business or what have you, it seems like there's no news or catalyst today, and these names just get destroyed. And Wix is down 13%. I was talking about, let's see here, DocuSign yesterday. DocuSign was down over 10% yesterday, closed down 12%. Continuation today, down under 70 bucks. So it's just funny that you can be right about, it's like the Big Short, right? He was right about the mortgage crisis and big great financial crisis and all these credit default swaps and all the issues it was going to cause. But he had to hold on to that short, because if he closed his short, he'd obviously be a different story, right? He was, like I always say, not wrong, just early. So it's just funny how here it is today. For some reason, they decide today's the day we're going to destroy these names that are being impacted by AI, which brings me to Adobe, right? So, I got those Adobe puts yesterday afternoon more as a play on what was going on with DocuSign and the fact that Adobe wasn't down as much. And, DocuSign's down 10, 12%. And, Adobe's business is not apples to apples to DocuSign, but a part of their business is. So to see it only down a little bit, I thought there was more opportunity. Then I looked at the chart and I said, wow, this thing go down to 330. So sure enough, opens pretty much flat, then just accelerates to the downside all the way down. It actually tested 340 about 1230 and then bounced a little bit. So I locked some of the calls out for 100%, then a little more for 200%. And then I was thinking, do I want to hold them all for the possible test of 330? Do I want to, just look for lower strikes? So what I did is I locked a few more out and then took those profits and got the 330s as kind of like a spec lotto. So let's see, why don't, just trying to get the chart over here. Sorry about that, folks. Here it is. All right. So, I mean, if you look at the chart all the way back at the start of August, so like August 12th, came all the way down to that 330 handle. So to me, and my thought is I'll probably wait till tomorrow, Friday, see how things kind of resolve here. But if it doesn't break, if it gets down to 330, which I mean, it's only a 3% move. And if that holds, then I'll stay away. But if it gets to 330 and it starts to break, I might look for some, I wouldn't call it some dumpster puts. I don't know what to call it, but maybe a move down to 315 or even below. It just, Adobe struggled. And I was playing a call side. I don't know if it was at the start of this year, at the end of last year, just as one of those names that you thought that maybe AI would help Adobe. But now, I mean, they just had earnings, and their earnings were actually pretty good, all things considered. But now I'm starting to think maybe it's the other way around. So, and we've seen some of these other businesses doing well. I mean, Oracle's obviously, but that's more because of spend coming in to Oracle as opposed to the other way around. So, anyway, so that's kind of the thought process there on Adobe. So I did get some of the 330s. I was actually thinking of closing the last of the 337.50s earlier, but I just have a couple of those left, already riding free with some nice profits. So that's the thought process there. Then on the flip side, obviously Broadcom and Oracle, some of these streaks. I think Oracle was down 7-8 days in a row. Let's see. I'm not trying to get the chart up here. And again, similar situation, just not that AI is going to destroy Oracle or Broadcom. I just think this whole, the great circle jerk is at some point is going to come to a head, and whether that's going to cause the entire market to come down or what have you, the dot-com bubble. I don't think the comparisons, I don't think it deserves that kind of comparison. It's totally different. Everybody likes to bring up, the dot-com situation as a, to ring the bell, the warning bell. But I do think there's opportunity, right? Because at some point, there's all these different moving parts. Like, what is all this investment that these companies are doing? What's the return on investment? When Meta says, or Nvidia is doing $100 billion with OpenAI, whatever those numbers, what's the ROI on that stuff? So anyway, not rant. I don't want to go on a rant on that, but that's why I'll continue to look at these names, the Oracles, the Broadcoms, as possible put plays, because even as hedge plays, at some point there's going to be a day they're going to be down 7, 10, 12%, and then those puts are going to be up substantial. So unfortunately, going the wrong direction here today. I was looking in the morning after the open. I'm like, do I salvage these? I'll just continue to hold. Who knows what happens tomorrow? 3% move on Broadcom puts it down to 320, and then my puts are back to life. So I'll just continue to hold those as a hedge. And then GameStop, right? And let's see if I pull this up here. Kept looking at those November 40s. I closed the last of my October 30s yesterday. And then I'm looking, and GameStop's up nearly 2%, hitting 27.80, and the Novembers are actually lower in price than they were yesterday. So let's see. Sorry, folks. So, I was looking to pull the trigger, but then it gets up to that 27.70 or so, and then finds pressure all the way back down to 27.50. So I'll just continue to be patient there. At some point, I'll look to add the Novembers. And then Nike, Nike, I've been watching for the last 2 weeks as a recovery bounce play. I was looking for some calls at the earnings. Thankfully, didn't pull the trigger there. But great earnings, right? And the concern or the worry is, number one, the tariff situation, right? So they already talked about it's gonna, I think, hit their numbers $1.3 billion, hit their margin a couple percent. So I don't think anything crazy there. And then what's the turnaround story look like? The inventory, all those different things. And I think if anything, the earnings kind of said, okay, we're doing well, and I think their conservative guidance leaves opportunity for upside. So, I was looking at the 80 strikes into earnings, and I was looking this morning, and then it was chopping around, looked kind of range bound. Once it started to find a bid over that 73, 75 area, I finally went and pulled the trigger on the 80 strikes. They look decent on a risk reward basis, right? I think they were 80 cents yesterday. Let's see, because they're down 45% for the day, right? But anyway, so to me, it doesn't have to get to $80 in the next 2.5 weeks. There's 16 days to expiration. Just if it gets to 77, 78 by mid next week, the call's gonna be up a couple 100%. So that's kind of thought process there. And I think that's it. I'm trying to think. So, Reddit, right? Of course, I don't know why I didn't bring up Reddit while I'm doing my rant on names that are getting supplanted by AI. But I'm surprised. I'm still shocked that Reddit hasn't found a bounce. And it tried to bounce in the morning. Looked like it was gonna, 215, 216 by 9:45, and then it's just been kind of a slow melt ever since. It hit 197.50 in the pre-market. So maybe that's kind of an area. Maybe I'll test tomorrow, and that could be a nice bounce point. But I'm not going to sit here and try and catch a falling knife. The good thing, the premiums are coming down on a weekly, so maybe tomorrow's a day to do some bounce play. That my concern with Reddit, and quote me on this, but there'll probably be some analysts coming out tomorrow morning. So is that going to be an opportunity? The 230s, those are 46 by 60 with 2 days left to expiration. 15% move. I mean, it doesn't have to move 15% tomorrow. So anyway, I'll sit on my hands there. Anyway, let's have a great day, folks. I'll be back. Rock and roll.